How do people make money from companies like Apple? I'll explain exactly how the stock market works. It is actually the simplest way possible. Imagine you own a small bakery. It is booming, but you need money to expand. So, you sell tiny pieces of it. These pieces are called shares or stocks. Companies sell stocks to raise capital. That money helps them grow and hire employees. When a company goes public through an IPO, it sells shares. Everyone wins. At least, that's the goal. People invest in stocks for two main reasons: capital appreciation, where the value increases, and dividend payments, which provide income directly to shareholders.
Stock prices are determined by supply and demand. High demand with low supply drives prices up. High supply with low demand drives them down. The price is the equilibrium where the two forces meet.
A stock exchange is where stocks are bought and sold. Popular exchanges include Nasdaq, NSE, and BSE. Think of it like Amazon. No crowded trading floors required. What moves the market? Many factors affect prices, like company performance and economic news. Investor psychology creates bull and bear markets. Fear and greed drive the short term. If you found this helpful, hit the like button and subscribe for more beginner-friendly investing videos. And if you want to understand the difference between a bull market and a bear market, check out the next video on your screen right now.